Hey everyone, welcome back to another video. Today we're going to be looking at Tesla's Q1 earnings call and reviewing the good, the bad, and the ugly. As you can see from the chart, in the after hours, the stock was up 5.3%. So we're going to see if that was thanks to a new vehicle announcement, maybe Elon stepping down from Doge. Let's find out. So just to start, I want to leave you guys with Elon's opening remarks from the conference call and what he had to say about his involvement with Doge.
Hello, everyone. Well, it's never a dull moment these days. One thing's for sure, every day is going to be exciting. As people know, there's been some blowback for the time that I've been spending in government with the Department of Government Efficiency, or DOGE. I think the work that we're doing there is actually very important for trying to rein in the insane deficit that is leading our country, the United States, to destruction. And the DOGE team has made a lot of progress in addressing waste and fraud. Starting probably in next month, May, my time allocation to Doge will drop significantly. I'll have to continue doing it for, I think, probably the remainder of the president's term, just to make sure that the waste and fraud that we stop does not come roaring back, which we'll do if it has the chance. So I think I'll continue to spend, a day or two per week on government matters for as long as the president would like me to do so.
So as you can tell from that clip, I think this was really one of the major themes of this earnings call, was to see Elon Musk and his attachment to Doge going further. And I think the market really liked his response. I think it was more favorable than they were expecting. And so he confirmed that he'd give 1 or 2 days a week to Doge, and the rest would be designated to Tesla and working in the company. Now, further on in the conference call, Elon also stated something that I think the market really liked. Take a listen.
We'll start to see the prosperity of autonomy take effect in a material way around the middle of next year. We still expect to be selling fully autonomous rides in June in Austin, as we've been saying for now several months.
The next question is Tesla still on track for releasing more affordable models this year? Or will you be focusing on simplified versions to enhance affordability, similar to the rear-wheel drive Cybertruck?
We're still planning to release models this year. As with all launches, we're working through the last minute issues that pop up. We're knocking them down one by one. At this point, I would say that ramp might be a little slower than we had hoped initially, but there's nothing, just kind of given that turmoil that exists in the industry right now. But there's nothing that's blocking us from starting production within the timeline we laid out in the opening remarks. And I will say it's important to emphasize that, as we've said all along, the full utilization of our factories is the primary goal for these new products. And so flexibility of what we can do within the form factor and the design of it is really limited to what we can do on our existing lines.
So I think this was comforting to hear for a lot of investors. Despite all the tariffs and uncertainty in the market right now, they confirmed that the new vehicle is coming out in the first half of this year, so before June. And the Robotaxi launch in Austin is also set to launch in June. So overall, I found the rest of the call a bit lackluster in terms of details. They didn't talk at all about the new vehicle models. They just said they were on time. The management team reiterated that their approach to solving autonomy was the correct one with their vision-based model. They tend to repeat that in every call. They also issued hopeful estimates of how many Optimus robots they will be building in 2030. I think Elon said something like 1 million Optimus robots by 2030, so we'll see if that happens. And also that they're in good financial health to navigate the tariff uncertainty right now and any potential recessions. So now let's head over to the slide deck that they released and see if we can fish out any interesting details or major updates on the company. So clearly what they put forward in Q1 was that the highlight was really the new Model Y ramp and how they simultaneously changed all their production lines across all their factories. So that was really what they put forward as the big win in this quarter. One thing I noticed here was that they used the wording "in the face of near-term profitability hurdles." that seems a little bit concerning that they may potentially drop into unprofitability depending on how hard they get hit by tariffs and any political issues with demand. As you can see, they did EPS of 12 cents this quarter, which is pretty close to being break even. So a little bit concerning, but we'll see how that goes. Now, total revenue was down 9%, gross profit down 15%, and operating expenses were up. We knew these numbers were going to be ugly. The street expectations had dropped pretty hard since the delivery numbers, so this is why the market isn't really reacting to any of these misses. It was really more about what they were going to say on the conference call and how they saw the future, if it was a bright future or if they really had concerns because of the tariffs and all the instability in terms of demand. One of the major positives, and it continues to be a positive trend over the last few quarters, was their energy storage deployment. That was up 154% year over year, so that's really a part of the business that's growing fast and growing consistently. This was an interesting detail. They mentioned how in the APAC region, the Asia Pacific region, they had a record day of orders the day they launched the new Model Y. So that's good to see that they're still growing, even in the face of all the turmoil. They continue to say that they fully ramped production in only 6 weeks, which was their quickest ramp ever. So they're getting better with these transitions of new vehicles, and that's really comforting for investors. This is a cool picture of the Model Ys driving themselves from the production line out to the outbound lot. That's pretty cool to see. Services and gross profit are also growing 25% year over year. That's another improving part of their business. So there's a lot of good, but we know that in terms of really core vehicle deliveries, that's where their main issues are. And we're going to see if they can turn things around in the second half of the year. And as you can see in the outlook, they kind of changed their wording from previous quarters in terms of volume. And they're saying that it's difficult to measure the impacts and that they're going to revisit their guidance in their Q2 update. So they're not giving any guidance. So a bit concerning. And finally here, they reiterate that their more affordable models remain on track for the first half of 2025. So I'm excited to see what those are going to be. Some people are debating whether it's going to be a totally new vehicle or if they're going to be just cheaper versions of the existing models. So we'll have to see, but it's going to come out in the next few months here, and it'll be exciting to see what they come out with. So overall, despite the rough financial aspect of the quarter, I think the management team was able to comfort investors with their continued positive outlook despite all the uncertainty in the global economy, and also that their product roadmap was still on schedule with the new model coming out in the next couple months, as well as that robotaxi launch in Austin in June. So let me know what your thoughts are about the Tesla earnings in the comments section. If you could subscribe, that'd be greatly appreciated, and have a great rest of your day.